Good day. I welcome you to this class once again. This is Scholars Universal Online Classes. You're welcome to Business Studies. This is Ledger Entries. In our classes so far, we've been able to discuss about some topics, bookkeeping ethics. We've been able to talk about shopping tips. I've been able to talk about consumer rights and responsibilities. So, in our class for today, we'll be talking about ledger entries. And at the end of this class, we're supposed to know about ledger. You should be able to define ledger. You should be able to identify items on the ledger. You should be able to record cash receipts. You should be able to record cash payments. You should be able to record discount allowed and discount received transactions. You should be able to make contra entries in the ledger. All right, let's move. Now, to start with, what is ledger? Now, ledger is a principal book of accounts where records of all transactions are kept. Now you have to, be reminded that ledger is the principal book of accounts where records of all transactions are kept, and this contains permanent records of all business transactions. I want us to take a quick walk back to times while we were still in school, and you want to pay your school fees, or you want to clarify anything that relates to your fee. I hope you remember, or if you are very, very observant, you note that the woman at the cashier section, which we all know, Madam Cash, she would have to bring a particular book that relates to you. If you look at that book closely, you will notice that the book has your name. It has all the transactions that relates to you from probably the first time you joined the school. And that particular book is the book we call the ledger. So now, once again, I want to take the definition of ledger. We said ledger is a principal book of accounts where records of all transactions are kept. So that is to say, each student has an account. So the accounts that will contain all the transactions, all your records, all your accounting transactions or financial transactions is what we call ledger. So if you are a customer and you do business with different organizations, take for instance your school. I'm sure your school would have a ledger account for you. That is an account that would capture or covers all the transactions that relates to you for that for the period that you are in the school. Now when we talk about an account, we are saying that an account could be defined as a form used to sort. An account can be defined as a form, I'm taking it again, used to sort and summarize changes in a specific financial transaction. That is, for each student account, it's just when we are saying student account, we are saying we are talking about that particular form that we are using to sort and summarize changes in a specific financial transaction. Oh, okay. Take for instance, at the beginning of the section, you've been able to pay 75% of your school fees. We would have to document that in that particular information in a particular form, and that form we call it an account. And when we talk about accounts, we are saying it is used to sort and summarize changes in a specific financial transaction. And I'm continuing with the slide. We said the ledger is the main book of accounts in which all detailed transactions recorded in the books of original entries are transferred to and appeared in a summarized form as account. So we are saying that the ledger is the main book of accounts in which all detailed transactions, that is, by the time I check your ledger, by the time I check the form that relates to you, I should be able to see all the transactions that relates to you. Okay, in the space of 2019-2020 section, you've been able to pay for school uniform, you've been able to pay for your end of the section party, you've been able to pay for your ICT fee, you've been able to pay for all the transactions that relate to you. I should be able to see them in the summarized form. When we say summarized form, I mean when I can see everything at a go. That is why those times whenever you want to clarify yourself, whether you have debt with the school or not, whether you are free or you've been cleared to write or to take part in an exam, what you need to do is go to the account section. And when you get to the account section, you will notice that they will have to go through a particular book that relates to you. So that book is what we call the ledger. All right. So Now that we understand what the ledger is, we said a ledger can stand on its own without any subsidiary book supporting it. But the books of original entries are prepared before the ledger for easy analysis of account records. Now, when we talk about books of original entries, we're talking about those set of books that you record transaction into first before you post them into the ledger. The ledger is, you get to post transaction into the ledger after you must have posted into the books of original entries. Now, let me take for instance, okay, you want to pay your school fees. The first thing you have to do is either you make transfers, is either your parents make transfers to pay for your school fees, or you take your cash to the account section to make your payment. Now, at the point when you are making your payment, now I'm coming from the accounting point of view or the business structure. Now, what the account or the cashier is expected to do is collect the money from you. Then the cashier will give you a particular document that we call receipt. And you can still remember, a receipt is the evidence of payment. Now, at the point when you are when you're given the receipt, the cashier would then document your name in a particular document. In a particular document, the document we call a cash book. That is to reflect that, or to show that we have collected money from so and so person. Are you getting me? Now, that cash book is one of the types of books of original entry. We said books of original entry are books used in recording transactions as they occur before they are being posted into the ledger. And examples of subsidiary book, or when we say subsidiary book, we are still saying the same thing. We are still saying it has the same name. With subsidiary books is the same thing as books of original entry, and it's the same thing as some set of people call it books of prime entry. Some people call it books of original entry. Some people call it subsidiary books, and at times they could refer to it as journals. And examples of subsidiary books are sales day book, we have purchase day book, we have return inward, return outward, we have the general journal, and we have the cash book. All of these books have their functions, and that is not what we are laying emphasis on for now. But for the sake of this class, and I was giving you a story where when you come to pay your school fees. Now, as soon as you pay, don't forget I told you that you'll be given a receipt. That is what you would see. You will know that they will give you a receipt, but it does not stop there. Now, after issuing a receipt, the accountant or the cashier would go ahead to record that money that you have paid into the cash book. And cash book is an example of subsidiary books or books of original entry. So after they must have recorded in the cash book, all the transactions, because most likely you might not be the only person that will be paying for that day. So all the set of people that pay for that day, they will record their transaction into the books of original entry. Alright, so after they must have recorded into books of original entry, they will now post all those transactions one after the other. They will post them into their individual ledgers, because every customer, I'm taking it again, every customer has its own account. So they will post them into their respective accounts. So that is what we call the ledger. And we said the ledger can stand on its own. That is, by the time I'm saying, okay, on this particular day you've paid for this, okay, the next day you paid for another thing, on the next day you paid for another thing. By the time they post everything into the ledger, I should be able to know and I should be able to see that you have paid for those transactions. Alright, the next thing is to make reference to accounts easily. The ledger pages are usually numbered consecutively. Each of the pages is called folio, and the number on it is called folio number. That is, to make reference to account easily, the ledger pages are usually numbered consecutively, and each of the pages is called folio. Take for instance, when we talk about, I'm sure you must have, probably you're an old student, and you've been with the school for a reasonable number of time, maybe 5 or 6 years. I'm sure your ledger, that is the page, that particular form I'm talking about, it might not be 1, it could be 2 or 3. So what we're saying is, to make reference to account easily, the ledger pages are usually numbered consecutively, so that for ease of accessing. And each of the pages is called folio, and the number on it is called folio number. So that is to say, on your ledger, on your form, there's a particular column that we have folio, and the folio is used for ease of reference. That is, if I want to quickly see it, okay, I'm saying if you check Wale's ledger on page or page 3, you should be able to see that he made payment on, it gives direction and bearing to someone that wants to go and search for your information. So that is that about ledger. All right, so let's talk about the items in the ledger. And what are the items in the ledger, and what does a ledger looks like? Okay, the items in the ledger include, okay, number one, we said we have dates, and this column appears at the both sides of the cash book. It shows the state at which transaction received occurred, because I have to see that, okay, you have paid for this. I have to know the dates you made that particular payment. So the next thing is particulars. Now, when we talk about particulars, particulars is talking about the details. Details. Give me the particulars. Give me the details of those transactions. Okay, on the 3rd of June, you have made payment for. Okay, you made payment for school uniform. You made payment for you paid for your tuition. So particulars is a section that is used to describe the transaction recorded. That is, it shows the identity of the items recorded at the both sides of the account. So this next one is folio, and I've mentioned that this column is also referred to as the reference column, and it shows the place where the other side of the account could be gotten. Okay, I'm saying that this particular transaction, you can find them on receipt number 22002. So that's the receipt. So definitely, if I'm going to check my receipt number, I will be able to see that, okay, this person actually made this payment. All right, so that is what folio is used for. And lastly, we have we have the amount section, and this column at both sides shows the financial worth or monetary values of the transaction recorded into the ledger. Okay, you have made a payment of 35,000 naira as your tuition. So definitely, I'm saying, okay, 3rd of June, particulars, tuition, folio, receipt number 2002, then amount 35,000 naira. So it's as good as that. So that's that. Okay, the next thing that you have to know when we're talking about items in the ledger, although you might not be finding this in the table of the ledger, but there are some instances when you might be asked, or you might have to know about them. Now, when we talk about discount, what is discount? From the word discount, I'm sure most of us must have had the word discount before. Take for instance, your mommy or daddy has gone to get something, and then, okay, usually you're supposed to get it at a particular amount of money, but eventually the seller is giving you at a lesser amount. So that is at an amount that is not up to the usual amount you're supposed to pay. I'm sure you must have remembered that. Probably you must have gotten such from someone before, probably from a seller. So, okay, so that is what we call discount. Discount is just, simply put, is a reduction in the price. Reduction in the price. Reduction in the price. So when price is reduced, now it is divided, when we talk about discount, it is divided into two. We have trade discount and cash discount. Of course, people can reduce money on their goods for you because of different reasons. Now, if the discount is given to you for patronage or for buying in large quantities, there are some times that when you go and buy, they will tell you that, oh, if you buy 5, I will give you 1. Or if you buy 5, you can pay less. If you buy 10, you can pay less. All of those things to encourage large quantity. Or, okay, you're a regular customer, come and buy. Come and buy this thing. We'll give you for free. Come and buy this thing. We'll reduce the money for you for patronage, or for when you are buying large quantity. All those discounts is what we call trade discount, and it ends in the subsidiary books. Don't forget, we said the subsidiary books can be also called books of original entry, and don't forget I said they can be also called books of prime entry. Now, for trade discount, now it ends. That is, you cannot see it again. You can't see it in the ledger. It ends in the subsidiary books. All right. So the next set of discount is cash discount, and cash discount on the other hand can be seen as allowance granted to the customer to encourage prompt payment of cash. Oh, now when we talk about cash discount is actually conditional. It is conditional in the sense that I will be giving cash discount to a particular customer so that I want him to pay on time. Take for instance, I will tell you that, okay, for this good that you have bought, if you can pay me before the end of the weekend, or before the end of the weekend, you can, instead of paying 100 naira, please pay 10 naira. Please pay 10 naira. So that's that about cash discount, because cash discount is always given or always granted to to encourage prompt payment. And cash discount is subdivided into two, which are discount allowed and discount received. Discount allowed and discount received. Now, discount allowed and discount received are those discounts that are recorded in the ledger. So I'm saying it again, discount allowed and discount received, which are types of cash discount, are the set of discounts that are recorded in the ledger. Okay, so don't forget, these are the set of discounts that reflect or that are recorded in the ledger, which are cash discount, and don't forget the cash discounts are subdivided into two. We have the discount allowed and the discount received. All right, so I'm moving to the next part, which is to discuss about the format of the ledger. Now, when we talk about the format of the ledger, ledger looks like, you know, it's a T format. You have to be seeing it on a table. It's divided into two sides, and on the two sides we have the debit and the credit side. Now, on the debit side, we have the date, particular, folio, and amount, just as I've explained, and we have the date, particular, folio, and amount on the credit side, just as I have explained. Now, you have to take note of the rules, and the first rule is for posting is to debit the receiver and credit the giver. Please, you have to always remember this rule: debit the receiver, credit the giver. And for every transaction, you are expected to post every transaction twice. Now, posting, you're supposed to post every transaction twice, and you have to always remember the cardinal rule, which is the golden rule. The rule is for every debit entry, there must be a corresponding credit entry. I'm taking it again. For every debit entry, there must be a corresponding credit entry, and vice versa. That is, also for every credit entry, there must be a corresponding debit entry. So for every credit entry, there must be a corresponding debit entry, and for every debit entry, there must be a corresponding credit entry. Please take note of that. All right. So, recording of cash receipt and payment into the ledger. If you're given a question and you are supposed to record, you know, the receipts or the payment, or you are supposed to record transaction in the ledger. To start with, I want to start with, you know, recording of cash receipt and payment. So let me take cash receipt first. Cash receipt first. Don't forget, in our rule here, we said the rule is debit the receiver and credit the giver. Please do not forget that for anything. Debit the receiver, credit the giver. It will help you because we will be applying them in our subsequent slides. All right. So now, when we talk about cash receipt, what is cash receipt? Cash receipts are usually debited to the, you know, when you say cash receipt, that is, you are receiving cash. Money is coming into you, that is, you are collecting, you are receiving. And we said you debit the receiver, right? So in that case, cash receipts are usually debited to the cash account because the account will receive the value. That is, you are collecting the value. All right. So now, take for instance, on 1st of January 2010, you know, you sold goods worth 5,000 naira in cash. That is, on 1st of January 2010, you sold goods worth 5,000 naira in cash. And okay, take for instance, okay, don't forget we said in our previous slides that for every transaction you are supposed to post them twice. Now every transaction has two sides, like two effects. Are you getting it now? So in this case, you are selling goods worth 5,000 naira in cash. Now when you sell goods 5,000 naira in cash, don't forget two things will happen. You are selling goods. Take for instance, you know, let's assume you've gathered, you know, biros, or you are selling biros, you're selling pen. Now you gathered pen, and for those pens you gathered like 10 or 12. Yeah, you gathered 12. Now, out of the 12 pen that you've gathered, you now sold 5 out of them. You sold 5 out of them, and you collected cash of 5,000 naira. Now, two things has happened. That is, biro, you gave out 5 biros, 5 pen, and you received 5,000 naira. Abi, those are the two things that happened. All right. So to post those transactions now, you have two accounts that you could post to, which is the sales account. That is the account you are selling from, which is your sales account, and also your cash account, because you are receiving cash, you are receiving money. But in this case, you'll be laying emphasis on the cash account. Now we are laying emphasis on the cash account. Now, in this case, cash account receive 5,000 naira and will be debited for receiving the value. Because cash account is receiving, right? You are receiving cash. You're receiving cash. Sales is giving out. So what you are supposed to do is The first thing is the title of the account, your debit and your credit. Then you draw your table. So on the debit side, which don't forget this is cash account. On the debit side, we'll be having first on the date first of January 2010. Then particular, what are you doing? You are selling sold goods. You're selling. Then the amount is 5,000 naira. Then you're done. So this is the first part, which is the cash account. Take for instance, if this is your sales account will not be on the debit side, it will rather be on the credit side. Why? Because you are giving. Sales, you have given. So sales will always have a credit transaction. So it will be on the credit side, 1st of January 2010, then it will be cash. Because when you sold out collecting cash, right? Then 5,000 naira. But don't worry, don't disturb yourself too much. If you understand this cash account, don't worry, we'll take that properly. Next. Alright, so the next part is I'm showing you the payment side. Now we'll talk about cash payment. Cash payments, when you are paying cash, money is going out from you. I mean, you're giving out cash. Now all cash payments are credited to the cash account, as the cash account, which is a ledger, will give values out. It will give values out. Now take for instance, on 2nd of January 2010, you bought goods on cash for 3,000 naira, and in this case cash will be credited. Why? Because you are giving out value. You are giving out value because you are giving out. When you bought goods, when you collected goods, what is happening to cash? You give out cash. So in that case, debit the receiver, credit the giver. So you are giving out cash. You're drawing your table. You have to write the accounts you're preparing, debit and credit. Then on the credit side, 2nd of January 2010, purchases. How much? 3,000 naira. And that is that. Alright, so let's take some set of questions together. Illustration 1. You have to record the following into the ledger account. You have the first transactions, second, third, and the fourth. Then let's take our solution. Let's treat these questions together. Now, in this question, I'll be showing you the 2 set of transactions that you'll be posting for all your entries, for all of them. Now, for the first entry, for this solution 1, which is this first transaction, which is 1st of January 2014, you were told that you received 40,000 naira cash from Ade and Sons. Now, for this case now, 2 things happened here. And the 2 things that happened here is that, you receive cash of 40,000 naira from who? From Ade. 2 things happened. You receive cash from Ade. That is, you receive cash, you debit you because you debit the receiver, and who is giving? Ade is giving. So you debit cash, you credit Ade and Sons. So the first transaction, okay, which is giving, we are starting from the person that is giving. Who is giving? Ade and Sons. So because Ade and Sons is giving, where will you put Ade and Sons transaction? On the credit side, because we've said debit the receiver, credit the giver. So because it's giving, you are crediting the transaction. So you draw your table, and on the credit side, which is this part, your date is 1st of January 2014. And what is Ade and Sons giving? Ade and Sons giving cash of how much? 40,000 naira. So that is the first entry. Now the second entry is, which is the cash part. Now when you are opening your cash account, don't forget it will not be on the credit side again, because cash is doing what is receiving. So in that case, on your second transaction, your second entry, you open your cash account, and what is happening to cash? You're receiving. So in that case, 1st of January 2014, who are you receiving from? Ade and Sons. And how much? 40,000. So we have, recorded the right entries here. Don't forget, you have fulfilled the rule of double entry that says for every transaction you're supposed to record them twice. And what do? You debit the receiver, then you credit the giver. And the rule of double entry says that for every debit transaction, which is Ade and Sons, Ade and Sons has been, you have debited cash account of 40,000 naira. It said for every debit transaction there must be a corresponding credit transaction. This is a corresponding credit transaction. This is what it means. So for this credit transaction now, where is the debit? You find the debit here on the cash account. I hope you understand what the rule is talking about now. All right. So I'm going to the next question, which is illustration 2. And illustration 2 says we are done with illustration 1. Illustration 2 says, okay, paid wages in cash for 3,000. Now when you're paying wages in cash for 3,000, the first thing you have to take note is, okay, I'm taking note of when you're paying wages in cash for 3,000 naira, paid wages in cash for 3,000 naira. There are two accounts that are involved, and the two accounts are wages account and cash account. Now for wages, what are you doing to wages? You are paying wages. And what is happening to cash? Cash is going out, right? So you are giving out cash for wages. So you debit wages, you credit cash. So in that case, from your cash account, now you have to take note of this. Please, let's take a quick walk back to, you know, when we started when we posted the second entry here. Now if you look at this cash account, you notice that we have already posted this a day and source. We have debited it 40,000 on the debit side. Now if in this very question again, if you have given any question that relates to cash account, please don't open a separate cash account for. So please do not forget that for any reason. Don't open don't open more than a particular account. We have said that account is used to, is used for, you're supposed to be sorting all transactions that relates to that account in a particular ledger. So if you encounter any other cash account, don't open another cash account. Please always put it in this particular cash account. So in this second entry now, it said paid wages in cash 3,000 naira. You are not opening another cash account. You are putting, the first transaction. This is the account. The first transaction is Ade and Sons. Nothing would change this. You are still using this account. You are not opening any other cash account. So for this cash, what is happening to cash? You are giving out cash. So because you are giving out, it has to be credited. So 3rd of January 2014, wages of 3,000. So that is that about the first entry, which is the cash account. And for wages account, what are you supposed to do? You are supposed to debit wages account, because wages is collecting from cash. And when wages is collecting from cash, what are we doing to wages? We will debit wages. Now, second entry, wages account. You open your wages account and you post it on the debit side of 3,000 naira, and you're collecting wages, collecting cash on the 3rd of January 2014, which is collecting cash of 3,000 naira. So that's that. Now the fourth entry, okay, the third entry, sorry, 8th of January 2014, sold goods with check for 8,000 naira. Sold goods with check for 8,000 naira. Now in this case, you have sold goods with check. Now you have to be careful to understand what this means. When you're selling goods, you're not collecting cash, rather you're collecting check. Now when you collect check, before you can convert that check to money, where would you take that check to? You will agree with me, you're taking it to the bank, right? Good. Now there are two things that are involved now. When you are selling, you are collecting money in the bank. Now when you collect money in the bank, that is, you open your bank account. On your bank account, your bank account will be debited, and your sales account, because you are selling goods, your sales account will be credited. Now the first entry, we are recognizing the credit entry first. So the sales account, so on the sales account, it has to be credited. You open your format, because you have not opened sales account before, and we have not opened bank account before, so you have to open a new account. Okay, credit 8,000 naira on the 8th of this. Okay, you are collecting the money from the bank, 8,000 naira. So the second entry is you're opening the bank account. So for the bank account, the bank is receiving, so you have to debit now on the 8th of January 2014, sales of 8,000 naira. So that's that about the third entry. Now the fourth entry, you're done with the third. Now the fourth entry, on the 12th of January 2014, you took a loan of 50,000 naira from Sterling Bank. You took a loan of 50,000 naira from Sterling Bank. Now when you took loan from Sterling Bank, you've collected the loan. Now where would the loan drop into? You'll agree that the loan will drop in your bank account. So you are still using your bank account. But where is the loan coming from? It's coming from Sterling Bank. So Sterling Bank is giving out loan, and then your bank account is receiving. So now the first entry, the loan account, because Sterling Bank loan account is giving out, because we are recognizing the credit entry first, you credit it 12th of January 2014, and where is it giving it? They're paying the money into my bank of 50,000 naira. Okay, so don't forget, the first entry for this fourth transaction is you're crediting your loan account, Sterling Bank loan account, credit, then 12th of January 2014, your bank is paying you 50,000. Now, the second entry, because the money is dropping into your bank account, so you have to debit your bank account. And don't forget that for transaction 3, we have received money on sales of goods for 8,000 naira. So because you have opened your bank account before, so you are not supposed to open another bank account. Are you getting what I'm saying? So I want to be seeing all the transactions that relate to my bank account in this particular ledger. So for this transaction 3 now, for the next transaction, which is transaction 4 now that I'm treating, so what I need to do is just put 12th of January 2014, and what am I collecting? I'm collecting a loan of 50,000 naira. So what that is telling me in essence is, what I want to see in my ledger account is all those transactions that relate to my transaction. I want to be seeing them together. So that is why we were saying that ledgers are books that contains the permanent record of transaction. They are principal books of account that contain the permanent record of transaction in the particular book. Alright, so that is that about the ledger. Alright, so to continue this class, I want to just discuss about the discount allowed and discount received. Don't forget, while I was discussing about the discount, we said we have discount. That discount is the reduction in the price of goods. And then we said we have two types of discount, right? We said we have the trade discount and the cash discount. We have the trade discount and the cash discount. Please have to take note of that. We have the trade discount and the cash discount. Now, trade discount is granted to, encourage patronage or large purchase of large quantity. Patronage. Okay, you've been patronizing me. Come and buy this thing. We'll give you at this rate. Okay, you want to buy much. You want to buy many. You want to buy many, so to say. Okay, if you want to buy this many, we'll give you this as your new prices and the likes like that. So why we have and we said the trade discount stops at the subsidiary book now, because in your ledger trade discount would not reflect. All right. So when we talk about the second type of discount, which is the cash discount, we said it's kind of discount that is granted to encourage prompt payment, and I said it is conditional. That is, if you can't meet up with the condition, you will not get it. That is, okay, pay me before the end of this weekend. If you can pay me before the end of this weekend, you can pay a lesser amount. If you can't, that means you have to, forfeit or you will have to forget the discount. All right. So when we talked about the cash discount, we said we have two types of cash discount. We have the discount allowed and the discount received. Now when we talk about discount allowed, now as earlier stated, discount allowed is an aspect of cash discount that is always allowed from the word allowed. Discount allowed to customers. That is, if you yourself, you are giving customers, that's what we call discount. That is, you are allowing discount, you are allowing customers to take discount, to encourage payment of cash. And it is usually found at the debit side of the cash account, as it is usually charged on sales. Now, before you can give anybody discount, definitely that person must have been trying to, get or buy something from you. Are you getting me now? Okay, take for instance, you sell pen, and the person is coming to buy 2 lorries. Okay, you're saying because usually you used to sell 1 lorry for maybe 1.2 million, but because the person is coming to buy 2 lorries, you're selling for 1.1 each. You understand what I'm saying? So whenever you are selling, that is when you can. If you are not selling, you cannot. You cannot allow discount. So if you are not selling and you want to allow, on what basis do you want to allow discount? On what basis do you want to give them discount? You must have been selling something to be able to give out discount. So discount allowed is an expense incurred to encourage customers to pay on time. That's the part of money that you are giving out. You are the one that will have to pay it. So that is what we are saying. It is an expense, and this will be illustrated under 3-column cash book. Now, by the time this time we'll still get there. Wait for our videos on 3-column cash book. We'll get to discuss about how to show discount allowed properly. All right. So for discount received, they said from the word received. In this time around, you're not the one giving. When you give it, it's discount allowed. Now, when you receive, it is discount received. It is an allowance received by the customers for pay within cash within the stipulated time. That is, you've been given discount to come and to pay within a stipulated time, and it is always charged on purchases. And before you can say you want to receive discount, you must have gone to purchase something. If you are not buying anything, they will not give you. Don't forget I told you that it is conditional. And if you are not even mixing up with the condition, they will not still give you. So therefore, it is found on the credit side of the cash book, and it is an income for the purchaser. Now this will also be illustrated under the 3-column cash book by the time we get there. So I want you to stay tuned, stay connected, and please watch out for our next video on 3-column cash book. Alright, now let's talk about the contra entries. I want to talk about contra entries in the ledger. Whenever we see contra entry is just, simply put, it is the movement, or when money is moving from your cash position to your bank position, whereas the money is not going out. Take for instance, you have a bank account and you have excess money. Like, okay, you sold too many products today, or you made enough sales today, and you have like 100,000 naira cash on you. And because it is not safe to be carrying cash up all around, so you decide to take the money into the bank. Now the question I would rather ask you is, is the money still with you? Like, is the money still with you cash? No, it's not with you cash. But is the money still your own? Even though it's still in your bank account, yes, it is still your own. Now, have you actually spent the money? No, you have not. So contra entry is just, simply put, when money is changing position from either cash to bank or bank to cash. You could decide to say, okay, oh, I did not have any money to buy food. Let me go and withdraw money from the bank. Now, at the point when you withdraw money from the bank, the money would, it should go into your pocket. So now, it makes you to have cash on you. You understand what I'm saying? But you have not, at that point, you have not spent it yet. Even though you have the intention of maybe spending it later. But at that point, you have not spent it yet. So what has happened is what we call contra entries. Now, contra entries is important in both 2-column and 3-column cash book. And it is the movement of money between the cash account and the bank account, I will explain. And the accounting entries relating to contra entry ends in the cash book. It ends in the cash book. Don't forget, in this class, I taught you about trade discount, and I said that trade discount ends in the subsidiary books. Now also, I'm saying contra entry ends in the cash book. That this contra entry does not go into your ledgers. Now, that is double entry requirement of contra entry is completed in the cash book. And contra entry is usually denoted with the letter C in the folio column of the cash book. That is, whenever I see my cash book and I'm seeing C in the folio column, it tells me that those transactions are, those kind of transactions are contra entry. And they will be illustrated better under 2 and 3-column cash book by the time we get there. So please stay tuned and watch out for our next videos. Alright, so the practice exercise, I want you to check all of this exercise in preparation for your, weekend test. By the weekend, we'll be having some set of tests. We'll be sharing a link with you. So please ensure you practice all of this exercise in preparation for that class, because the test results will be generated and it's going to be sent across to to your parents for proper evaluation and assessment. So please ensure you practice all of this. Now the first question is, what is ledger? State the items that are found in a ledger. You're supposed to know what contra entry is. So what is contra entry? And you're supposed to record some following transaction into the ledger account. All right. So to record all of this ledger transaction into the ledger account, what in the question you could be asked questions like, which account are we going to debit? Which account are you going to debit on credit? So for 1st of January 2014, debit what and credit what? You'll be given questions that relates to all of this in our test at the end of the week. So please don't forget, like and subscribe to our channel. We have a number of the practice questions. Okay, it goes beyond all of this. All right, so